Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Bayer Crop Sciences, which I believe can go up 40 to 50% from these levels in the next year and a half. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Bayer Crop Sciences, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. For detailed market or company talk, you can directly contact me and we can work things out. Now about Bayer Crop Sciences, established in 1999, they provide crop protection, pesticides and plant technology services. It is a top brand in its segment and a brilliant play on rural economy. Actually, they provide crop protection basically products and products which are into agrochemical, a multinational firm spread over a number of countries, and the market cap of the company is around 22,000 crores. If you look at the financials, then financials are decent enough considering the kind of business environment we are in with the pandemic, etc. The sales went up by around 7.8%. They had a loss of 45 crores versus a profit of 138 crores. High tax expense of 151 crores led to the losses. On normal tax, we could have had a profit of around 85 crores versus 138 crores, which would have been still lower, but wouldn't have been losses. So 85 crores of profit would have been there. High promoter and institutional holding is there with 13% free float, and it is a very high pedigree stock. It is not a stock in which you could say that the management would do something wrong or something untoward may happen. So it's a very strong company. It's just that the business environment is such that the company is not able to produce the numbers. Return on equity of 24% is pretty strong. Operating profit margin of 12% is also decent enough. Now, the performance of the stock and the company stock has been relentlessly falling for the past few months. So, but we have seen the fall happening after a high of say 5,000, 6,500, and now the stock is has touched 5,000 today and has recovered. Numbers have been decent but declining. So the problem here what we are having is that numbers are decent enough when you consider the industry, but numbers are declining every quarter. If you look at year on year numbers, it is going down, and that's why probably the stock is falling. Return ratios are decent enough at around 20-22%. Sales numbers are good. It is a market leader in its space, and that's the biggest positive for something like Bayer Crop Sciences. And sales should pick up as things improve. So maybe FY22 and surely from FY23 onwards, we will see sales picking up. So that's where we are very positive on, and we believe that things will pick up going forward. Healthy dividend payout is there, and they pay very good dividend. Yeah, so once things normalize and you get higher profitability, you will see that the dividend payout will be even better. So why I believe it is a buy on decline? It is a market leader in its space. That's the first thing. So we are not talking of any other agrochemical company which is into one domain or only in a single product. It provides agrochemical products, it provides pesticides, it provides crop protection products, etc. And it has acquired a number of multinational companies in itself. So companies like Monsanto is part of Bayer Crop Sciences, and so on and so forth. A global agrochemical company, it is not just based out of India, it has multiple domains across the world and across continents. So it is just that the cycle needs to turn around, and the stock will perform. So from a long term basis, these are very attractive levels to invest into. So will outperform as rural economy recovers and things really get going, and especially global economy recovers. and things really get going there, then we'll see the numbers pick up and the stock recover big time. And the point here is, let's say that if you want to invest for 4 5 6 years, these are very good levels to get in. So if the market gets going and we have the agricultural season coming up, we have the monsoon, etc., I won't be surprised if we see 7,000, 7,500 on the stock by September, October. That's my assessment. I think the downside is pretty limited, whereas the upside is considered to be between 40 to 50% over the next 6 to 8 months. But if you are trading for a 6 months time frame, if you want to take a trade, then keep strict stop losses in place. Another thing that has happened is that recovery in the tractor space has also shown the way that okay, time has come that where agricultural things and rural economy is picking up, and we are seeing over the last 4 to 6 quarters that the tractor space has been doing well, that the tractor space has been producing very good numbers. So hopefully crop protection products and agrochemical companies would also do well once vaccination is done and things really open up. Currently at 40 42 times is attractive. Why I am saying this is that it has normally traded at between 55 60 times in very good times, and currently it is trading at 40 times, 39 40, which is not very you can say expensive at all. Reasonably priced, not very cheap, but around these levels one can start buying. It has fallen 25% from the recent highs, and I believe that now the downside is pretty less. I'll talk about the technicals next, but overall I believe that downside is no more than 10% from the 5,000 levels it touched just recently. So if you look at the technicals of the stock, then strong support is between 4750 5,000. So I believe that 4700 or so could be the worst we could see on the stock. The 200 DMA is around 5400, it is below that, so one can start accumulating. And if you really want to keep a long term stop loss, you want to keep it for 4 5 years, then that has to be around 4200, which is around 15% lower from the current levels of 5000. So if you start buying at 5100, you can keep buying at 2 300 point fall in 4 5 tranches and accumulate in this region between 4500 to 5000 if you get the chance. Otherwise, if there is a reversal, we could see a 10 15% up move over the next 3 to 4 months, and a huge up move probably in the next 6 to 8 months. That is what I believe could take place. Stock has been falling for a while, it has been consolidating and falling, so there has to be so just like when stocks really surge and they are good quality stock, there are times when they consolidate. We have seen in the IT stocks, we have seen in the pharma stocks, and similarly when stock fall a lot, then which are good quality, then there would come a time where they'll start to consolidate and they would not fall. I think 5000 to 4800 is that region where if the market even falls big, the stock may not fall, and this is the region between 5000 to 4500 that one can accumulate. So may see consolidation and an up move in the next 4 to 6 weeks. I think in the next 6 8 weeks we'll see that happening. So in my opinion, buy on major declines and at current market price. Keep track of numbers. Numbers need to improve. Probably if you're buying for 3 to 5 years, always keep track of quarterly numbers and how things are coming up, and then take a call. A very good portfolio stock from the agri space that you can keep for 5 6 years. Over the next 6 to 8 years, it can definitely give you 2 to 3x returns, and have less than 10% exposure into such stock. So this was my video on Bayer Crop Sciences. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot.